Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what's going on. A lot of good information here. Obviously, I'm a pretty big gold and silver bull at the moment. You could probably see from a week or two ago the change in demeanor towards it. After I saw the yields start to really turn, I was like, man, this is the market conditions that make it really ripe. Once we saw price break out of its flag pattern, it's looking pretty nice. Lots of momentum behind it. So I am going to talk a little bit about gold and silver with some of the posts and retweets. I think there's a couple of quotes in there and whatever else I've got. I think there's a housing, maybe one or two. So I'm going to give you my financial opinion. Again, if you want to follow me on Twitter, you can look at me at finding_finance. And if you want to follow me and how I'm positioning for this bull market, it's finding-value.com. The platinum membership, you can use the word discount in the coupon code. And we're going to get moving along here. So we've got housing affordability worse than 2008. Big difference, though. We don't have the leverage or inventory of 2008. That is correct. And you're seeing these people throw this stuff around, all this information, prices declining, this, that. He is correct. We do not have the inventory. The affordability is bad. It is slowing things down. I will not deny that. Is there something that can cause loaning to really slow down that's out there? There very well could be, and maybe that's what the interest rates are telling us. We're also seeing the lumber to gold ratio, which I showed, I think it was yesterday or 2 days ago. That is also showing us that lumber. Now here's another thing. I want to jump back in here real quick. A lot of people use these indicators, like a lumber to gold ratio or some other ratio, but you have to keep in mind, since 2020, that ratio got pretty messed up. What do I mean by that? If you're hightailing it in a car, you're going real fast, somebody can monitor one of the temperature gauge. So you're monitoring the temperature gauge, and if it starts to creep higher, you're saying, okay, we're pushing the limit here. And the temps are starting to exceed the cooling capacity. This engine's heat is generating more heat than the cooling capacity can generate to keep it basically stable. So then you could say the economy is overheating based off of how fast it's running, or the economy is slowing down, and we could see that also slow down. But that's also basically saying, well, we've got stable inputs on both sides, the supply and demand side. The supply side of lumber, the demand side of lumber. They're both somewhat stable. The thing that kind of throws me off a little bit is in 2020, that jacked up the stability of everything. So that stability is it's not like you're going on in a car and you're ripping it and you've got the pedal to the metal and it's just slowly creeping the temps up. What's happening is your temps are spiking. Maybe you're at idle running AC, not doing anything. And then it goes way down as the car starts to move, as you move and the air goes through all the heat exchangers. And that's not necessarily that the car was, overheating and about to blow up. It was just sitting there generating heat with no air going through the heat exchangers with the AC on in a very hot temperature. Doesn't mean the economy is going to blow up, though. Once it starts moving, or once it regains its footing, once supply of lumber comes back online, it becomes very dynamic. And some of these ratios can get a little bit more difficult to read with the gigantic mess up of stopping production. And then I just want to go into a little bit more. They stopped production for 2 months. Then they lowered interest rates with QE in basically the prime time of one of the largest home buying demographics coming into home buying years. What do you think house prices are going to do? They're going to shoot up and rocket like no other. And that's exactly what happened. Demand shot like a moon, and supply went down because they shut all that down. Of course, the signals are going to get all jacked up. Of course, lumber is going to go to some ridiculous level, and then it's got to work its way back down. But working its way back down doesn't mean that the economy is weak. It just might mean that the supply-demand balance is starting to regain itself. And I don't know if that indicator, and I'm not saying about that right now, I'm just saying, I don't know if the indicator back in 2021 or whatever was necessarily in a stable area where it was giving valuable information as an input. That's all I'm saying. So coming on down, what do we got here? We've got SPX. SPX is now right up against the pink trend line. Very stylish setup with pink bullish expanding falling wedge as backtest pattern to the yellow trend line, which starts from December 2021 top, which I called here. It sure is important to have an open mind with the markets. Now, has anyone thought this? And I don't know. I'm just throwing this out here, guys. I don't have everything, but I want to make one comment first. I like how he says very stylish setup. I really do like that. I think it's kind of funny. I like how he did it in pink as well. But what people might not be thinking, what if everything goes up? Has anyone contemplated that? What if gold rockets here and everything goes up? SPX, NASDAQ, uranium, oil, copper, etc., etc., etc. I mean, I'm not seeing too many bearish signs in some of these outside of yields looking kind of funky. Now, I'm not saying that it will go up forever. I'm not saying the duration of the move that's going up, because I don't know that. But what if everything goes up together for a little while, and then the big hit comes at some point, whenever that is? But I'm just stating that maybe that happens for a period of time. If it's a couple weeks, month, whoever knows, or whoever knows, I should say, no one knows that time frame. Here's SPX versus inflation. Beware echoes of the past. Nice little chart here. It says compare this to the current position. This here was back in the rollover of 2000, 2001. We have a similar setup that is occurring right now. And I agree with the timing. I agree with the way this all looks. I think it works very well. We're in what's called a bear trap in some of these commodity companies. It's wave 2. Is wave 2 done? Maybe it still has a little bit more to go. Maybe it doesn't. But what we're seeing here is it's very similar as we get a rollover, just like the 2001 era. We come back down and maybe we get another kind of push in the middle of it. And we get our 3 little, humps, so to speak. But nice little chart here on this SPX versus inflation. And just when this goes down, it does not mean that the S&P 500 is going down with it. This is a ratio of SPX versus the producer price index, inflation. If the inflation is a lot, we could go up in everything because the dollar is going down. Just keep that in mind. It's a ratio. Coming on down, it says weekly cycle is only on week 4. So it should have lots of more energy. Posted some revealing charts on the surface on where it probably goes next. Many have called for a top for months. Most missed the lows, and many have bailed to get in lower. That's how bull markets work. So I like this. We got the breakout. We've got the 2 little bloody nose candlesticks. We know what that means, guys. We know that we've got large buying pressure, the smaller selling pressure, and generally speaking, that is a recipe for higher prices. Go gold. I love you at this moment. We'll see what happens. I'm not loved and married to the stocks, guys. Calm down. I just think it's a very good setup. Very good. And the conditions are changing for that setup to work. This is the conditions that I'm talking about for that setup to change to work. So it says, indeed, this is the time in the interest rate cycle when the gold price transitions from its current consolidation level to the next higher one. So we look at the Fed funds rate. Here's our upper limit. When this thing goes sideways, right? Generally speaking, it ends the consolidation. We start to come back down in interest rates, and then you go to a larger, higher level in gold. You have another consolidation area. This here is also an inverted head and shoulders. And then another large break to the upside. So we went from a declining interest rate environment and a big old run. From this run here, we did have a consolidation in between it, all the way to the top here. A lot of it pulls back when markets start to get a little bit more, rate hikes, inflation style. So when inflation kicks up, that's when I think we need to rotate into something else. But right now, rotating into gold, I think, is a one to look at. We also have ridiculous valuations on the gold and silver mining companies. Ridiculous. So that's also another thing that I really like in the alignment of this setup. Coming on down, it says watch $2,000 on gold. When that's given, I think every CRB component just slams the accelerator. My buddies are all libertarians. They love gold. They know it's the eventual solution, yet none are long currently, which is odd because they are usually long in suffering. Over 2,000, and they'll be chasing, praying for pullbacks. The whole CRB, commodity resource, is about to go positively mental. Just as Jay Powell starts to think he caught inflation, we start getting some soft GDP prints. It just feels so prime here, and I'm rocking massive CRB positions. Remember, 2021, when it all roared, this time it will be larger in amplitude as everyone panics out of the USD and especially treasuries. If you need me, I'll be in the VIP session watching carnage from every other CUSIP. Oil will lead, but gold won't be far behind. So that's what Cuppy says. I agree with him. This could all just rip it based off a weakening dollar. I agree with that. Rashid, he says, silver's on the verge of a breakout after nearly a 3-year flag-shaped consolidation. Back in 2011 and 2020, silver gained 180% and 155% respectively within 5 to 8 months. If history repeats, then silver could spike over 150% to all-time highs by early 2024. I like his chart here. I like how it's really big picture view, super clean. We've got kind of a consolidation breakout, but boom, 180% move, consolidates all the way back. We go into what this is called is the dead period. It's a double bottom. You go a lead in, double bottom, and then a break. This is a slingshot here, the slingshot cheetah move, but boom, 155%, another big flag pattern. It'll probably be the same size here of 155%, moving higher, pending the breakout. Maybe we get back to the $50 level. Maybe we break that level. I don't know, but I like this chart. Looks real clean. Good work to him. And that is silver priced in the US dollar. Here's Warren. It says, Warren spends 70 hours a week thinking about investing. It says, we do a lot of thinking and not a lot of acting. A lot of investors do a lot of acting and not a lot of thinking. Yeah, there is some merit to that. That's for sure. Here's Gray. It says, take a minute this weekend and really think about what this post means. It will be the best spent minute of your investment life. It looks now like the next phase of what I labeled everything non-USD up together move is now here. We now also got my expected break on an ultimate long-term, long-standing chart above that quarterly resistance line. Perfect gold storm coming. USD to 80 as expected. Fed rate cuts, QE. As said, everything non-USD up together, move coming. It is now here, history in the making. This chart looks ridiculous, guys. What he did is he basically took the top here, and moved it in a logarithmic fashion. Bottom here, bottom here, bottom here, logarithmic fashion. This could go up quite substantially to the upside. We also have chalk and money flows starting to come on up. You can see that we could go up into the positive here at some point soon in the future. And we also have the moving average coming across and doing a positive crossover on a long-term time frame. So this thing could have some juice behind it. And this is the possible span for the 5th K wave to top. If right translated, then we top beyond 2028, and in 2034, if 5th is similar to the 4th. The 5th Kondratiev wave, K waves, have lasted 54 years on average. The price target is in 10,000s in today's monetary value. 34 years into the 4th K wave, KWH wave, equals the right translated. Pretty awesome looking chart here. It's a gold quarterly chart. Big upside. It's a probable halfway pattern for this flag pattern, projected upward on a logarithmic chart. So there's no such thing as a 100% sure thing when investing. Thus, the use of leverage is dangerous. A string of wonderful numbers times 0 will always equal 0. Don't count on getting rich twice. So that's what I've got for today, guys. I'm going to end it there. A lot of gold information, and I'm getting pretty bullish on gold. That does not mean that I'm selling my other stuff necessarily to go 100% into gold. It's not that type of thing. I'm diversifying out, getting more in when things look good. I'm going to buy more when things look good and the market conditions look good. And gold looks really good. Silver looks really good. Platinum looks really good. They all look really good in the platinum precious metals area. Also, we've got a really good alignment here. Someone was making a comment, maybe, when I bought some of my oil and natural gas companies, they also had that alignment in 2020. It's the same alignment that I see in precious metals. That alignment there is we've got positive signals in the breakouts of a lot of these charts on a price chart. We also have a lot of positive market condition changes on yields, which means something could be coming from a perspective of when these yields start to uninvert, when the 2 and 10 year and all this stuff start to uninvert, the 2-year yield starts to fall, it gives us signals that the market conditions could be changing. That's what I mean by market conditions changing. They're changing in a positive way for gold. You look at the XAU to gold ratio, which is the gold and silver mining companies in relationship to gold. Those are dirt cheap. They are dirt cheap. And then when you take GDX or that XAU, the gold and silver mining companies, and you compare them to other ETFs, they have broken downtrend lines against almost all the other ETFs. You kind of, lump that all together, all that information, see the confluence of information. What does that mean? It means that gold and the gold silver mining companies could outperform here. And what I'm doing is I'm looking for ways to capture it that will 100% capture it. Think physical metals, think royalty companies. And then I'm looking and digging down into the mid caps. Those are your big kind of, I would say, highest rewards with lowest risk that you can take in some of these kind of mid cap gold, silver mining companies. They're producing, but they're kind of like on the edge of being profitable, but maybe not being profitable. Then you got your inflection point guys, which are smaller, single mine based, way more risk. But if they come into profitability and the price moves up at the same time, right when they're developing a mine and that mine's coming onto production, you can see some ridiculous looking moves. And I'm starting to accumulate some of these companies because they're way down there in the gutter. Then you got the swing for the fence stuff, speculative. They're drilling holes in the ground, see how many ounces there are in the ground, and retail investors go pile into that just because they're going to chase price movements. But that's what we've got. That's what I'm going to probably start, continue to talk about on the website. And we've got a 7 a.m. Mountain Standard Time Saturday for members. I'm going to tape it. Don't worry if you can't go there. I'll tape it. I'll post it on the website shortly thereafter when everything compiles and everything. It takes about a couple hours. And then, you can view it then. So that's what I've got for today, guys. Give me a thumb up for the content, subscribe to the channel, and we'll catch you next time. This is Finding Value.